According to the latest Ulster Bank PMI, Northern Ireland's private sector hasn't had the best of starts to 2015. January saw the first simultaneous decline in output, new orders and employment since May 2013. However, economic conditions may not be quite as bad as the headlines suggest. One decline which businesses will be glad to see, and that's the easing in inflationary pressures. Falling fuel costs have led to inflation falling to its lowest level in 31 months. This factor, alongside competitive pressures, has led Northern Ireland's private sector firms to cut their prices at their fastest rate since February 2013. Looking at a sector level, Northern Ireland's service industry was the strongest performer in January. The local service sector posted its 19th consecutive month of expansion in terms of business activity. Furthermore, the rate of growth in business activity was faster than in the previous month in December. It was a similar story with service sector new orders and employment. Again, the rates of growth in both these indices in January was stronger than in December. When we look at the other sectors, manufacturing was broadly flat, both in terms of business activity and new orders, with a modest decline in staffing levels in January. When we look at the construction sector, January saw it record its first decline in business activity in 20 months. Once again, the retail industry posted the steepest decline in business activity of any of the sectors. Furthermore, looking ahead in terms of new orders, the retail sector saw new orders fall at their sharpest rate since October 2012. The second half of 2012 was characterised as a period of sterling weakness and euro strength, and this facilitated cross-border trade for the retail industry, particularly from south to north. However, looking at 2015, with sterling at a 7-year high against the euro, cross-border trade is likely to move in the opposite direction, i.e. from north to south. Overall, the latest survey is perhaps something of a mixed bag. The continued strength in the service sector is perhaps overshadowed by the fact that Northern Ireland's economy continues to diverge from the UK. The sterling-euro exchange rate is one key factor which impacts on Northern Ireland's firms more so than their counterparts in Great Britain. Over the last half-decade, this exchange rate has acted as a tailwind to the Northern Ireland economy. However, in 2015, this is set to turn into a headwind as far as the economic recovery is concerned.